Yeah, welcome back. This is Newsfile. It's your most authoritative news analysis platform, and here on Newsfile, we put Ghana first. And my guest, Bright Simmons, Honorary Vice President, Imani Africa, Oliver Baka, Vormawo. He is researcher, University of Cambridge, Faculty of Law. Dr. Eric Odrosai, Director General, Internal Audit Agency, that's the IAA. Some of your comments before we go to GNPC. Kwesi Kisiedu says, fellow Ghanaians, please do note that corruption kills the innocent. Eschew corruption and let's build Mother Ghana together fairly. Ewenam says, it's okay for the president to commend persons that have excelled in discharging their responsibilities. The theory of rewards and punishment. What I find intriguing is his unhealthy comparison of the acting Auditor General to Domelevo. What was that meant to achieve? Avoidable. Prince Henry in Koforidia says, it is very wrong for President Akufo-Addo to even compare the acting Auditor General and the former Auditor General, Daniel Domelevo, in terms of fighting corruption, when the President is yet to confirm the acting Auditor General. Mr. President should be seen to be neutral and not praising one. Collins, if the authorities of society are not in the course of reason and assimilation, then rejecting such authorities and replacing them with a logical and humane alternative is not anarchy. That's a bit, I have to try and understand that. It's the existential duty of every thinking and feeling human. A.J. Nyavo John says, the president is just paying lip service to the fight against corruption. And it's not surprising because he's neck deep. All right, you need to speak with where you have the evidence. Maestro, as someone says, using words such as misappropriation instead of stealing is a clear message to the nation that the AG, as the Auditor General, is just telling us and nothing will be done about these indictments. Oh, that's the language they all use. It's not about this particular one. Ray Wilson. Ray Wilson says, Zoom Lion continues to feature in Auditor General's report for one way or the other. There are irregularities in doing stuff, yet no one is questioning Zoom Lion. Are they untouchable? And then Jake says, we have all the anti-corruption agencies in Ghana, yet issue of corruption is still skyrocketing. Is it that the agencies themselves are also corrupt or are sleeping on the job, taking fat salaries and allowance each month? He says, read the Auditor General's report. The cash, tax, contract, payroll, and procurement irregularities happening now are perhaps even worse than what this government called incompetent in opposition. They promised to do better, but what has changed? Remember that this report has 2016 audits, 2017, 2018. So there's a bit that goes back to 2016. Jama Woyele says that, Zongo Banku says that the more they create anti-corruption agencies, the worse we perform on the CPI. Sad. Schofield, Man Kujo, you are the last person's message I read. It says, clearly the Auditor General's report is inconclusive. He doesn't want to be an ambush auditor and so has given some space for review. This is what we do, and then we mislead the people in the public. The Auditor General's report, like the Supreme Court ruling I read to you, says the report is final. It's not supposed to be interim. Something the former Auditor General failed to do He was not supposed to give you interim audit reports. They don't do that, okay? All right. So, okay, so let me take just one or two more here. This one, your message, Gabi, your message is long, but I'll read. It says, it's important to note the content of the Auditor General's report. They are current. You will see, for instance, this 2020 report, most of the MDAs have 2019, 2018, and 2017, and some are 2016. These are what we have to work on and ensure that the reports are current. Thus, the MDAs must be made to comply with the law establishing them, most of which have to do with the fourth month after year end. I didn't get that portion correctly, but you say also that the report to Parliament, the Auditor General determines which management issues to pick from the long report, and his report is final. Thank you for your message. Okay, YK Ansayabwa. Your message is too long. I can't read that so long. All right. So we are here until sometime 12:20. Now let's go to Bright Simmons again and begin from the matters of the GNPC-Aker Energy matter, which we began to deal with 2 weeks ago. It does appear that issue will not go away any soon. We speak to Bright. I come to Dr. Odrosai, who has raised issues and says that GNPC cannot position itself above parliamentary approval for international transactions. It appears on that score, you and Bright may clash on a few of the issues there. Right, so Bright, this, GNPC-Aker Energy matter, I thought that it has supplied us some good information that suggested that what they are seeking to do is in the interest of the Republic.
Sorry, was that a premise? Or are you? I'm not too sure.
Yes, it's a question. It's a question. Some of you are being tagged as anti, Ghana.
Mm-hmm. No, I disagree. I think that first of all, the information that I've provided is scanty. Unfortunately for them, the information that is out there in the public domain, especially for those of us that have been following matters in the oil industry for many years, for a decade and more, where we've commented severely. Imani was the first organization to point to technical decisions taken by Tallow that we said will impair output in Jubilee. We started talking about that as far back as 2008 and 2009. Nobody was discussing these matters. And today, people make it look as if concerns around, FPSO turrets and concerns around water injections and some of all of these decisions that now sand contamination, et cetera, are commonplace. No, they weren't. When we started talking about these matters in 2008, 2009, nobody else took it serious. And now we know that there's underperformance in Jubilee and the recovery rates in our fields are very low. So my point is that, because of our familiarity with the issues in the industry, because our familiarity with the policy regime and the rest of it, we are able to independently analyze the information that is available, but which the GNPC has not necessarily put out, and come to the conclusion that the transactions that they are trying to foist on the people of Ghana, trying to get the state of Ghana to borrow on our credit and give them the money for these misadventures are not in our favor. And I'm not sure how you want the pattern of question and answer to proceed, or whether you just want me to go ahead and keep explaining our position.
Well, so I just needed you to begin with your preamble and then go. I don't know if we have the time. The time will admit that, but would have gone through point by point the issues as have been raised by Professor Henson, and which you also take on one after the other and provide your your position to suggest that he is clueless as far as the issues are concerned. So that if you wanted, for starters, beyond what Professor Hinson has said, the GNPC themselves have issued us a statement and suggested to us their position on some of these issues. Professor Hinson raises the topic, GNPC will merge the fields. He says this is false. They will not merge the fields. Mr. Simmons claims that GNPC is to merge the fields and create an SPV, a special purpose vehicle. How can two fields be merged physically? Again, Mr. Simmons plays with reality to fit his narrative. The GNPC is only saying that the joint operator company will be the operator of both fields. What do you say?
No, those are completely peripheral and irrelevant matters. Obviously, I'm not a novice in this space. I don't think that two fields that are hundreds of miles apart, or can be merged by taking shovels and digging one into the other. So I'm not even sure we need to be spending any time at all on these very peripheral and irrelevant issues. Okay. The critical concerns we have are about threefold. We argue that, first of all, we need to separate, and this is a preliminary context, we need to separate discussions about the two fields. There are not one field, but there are two fields. So you've got, and for, the names get confusing, so people don't want to follow the conversation. I will call the bigger field Pecan, after the main discovery there. There are three discoveries that have been declared commercial: Almond Beach, Pecan. Pecan is the big one and is the one that is going to be developed. The block as a whole is called Deepwater Tunnel Cape 3 Points. But in order for people to be able to follow, I'll call it Pecan. Then you've got a second one called the SWDT block that has a main discovery called Nyankom. So I'll call that one Nyankom. It's important, first of all, that we look at the two fields separately. The GNPC wants to buy significant stakes in both. Now, our concern is that when you do an analysis of either of these fields, you come to conclusions that are starkly opposite to what the GNPC has come up to. So I'll take them one after the other, and then I'll go through them. So when it comes to Nyankom, our position is primarily threefold. We say that this field has a 50% success rate in terms of the two wells that were dug to try and find oil, the two exploratory wells that were to find oil. The second one was so disappointing that after making some PR noise about its prospectivity, the whole well has more or less been banished out of prospectus of both GNPC and AKER. The Nyankom one that was successful is not that prolific compared to other opportunities that are in our basin. And we give examples of the Erin block in the expanded shallow water tunnel block, where we have dug 14 wells. Several of them have undergone production testing. The contingent resources, which is from the data we have, what we are kind of pretty sure we might be able to get. I mean, it's not as rigorous as proven or probable resources, but you don't have proven or probable resources in Nyankom either. So we are using the same benchmark to evaluate both the Erin block and the Nyankom block. And the Erin block has about 500 million barrels of oil equivalent when you use the same yardstick. So it's like about 500 million barrels of oil is there. The company that got that deal has a subsidiary called AKER Energy. The parent company itself filed for bankruptcy protection. We have relinquishment provisions because the extensions that were given to them have elapsed. They've not done the work program they were supposed to do. There are clauses in the contract that can be activated. There are a whole range of things that will happen. In a few years' time, that block is going to revert back to Ghana. When it reverts back to Ghana, the government has the power to give 75% of it to GNPC. And then GNPC has the power to go to Halliburton, to go to Technip and these other people, enter into strategic arrangements like we tried to do with Technip from 2012 onwards. And if in that instance, we want to be an operator in partnership with a technical services company that responds primarily to us, that is fine. And we're going to spend very little in terms of acquiring the rights. With all the money we'll spend will go into developing those fields and moving them into production. When you talk of Nyankom, which is highly risky, where the data is not so favorable, we want to spend in the region of, because they valued it at about $700 million. If we negotiate based on the $1.1 billion ceiling we have and we buy it for about $400 million, we are shortchanging ourselves. We think for a field where appraisal has not even been done to actually confirm the volumes that we think are there, and where the volumes are not substantive in terms of what we already know, and which nevertheless has significant upside, the right approach is to wait for the private sector to derate the field. And if they don't, until we change the law, we went back to Parliament and changed the terms of that agreement. The relinquishment provisions were very aggressive and would have got the field anyway. So it's two things. Either they go there, do more drilling to confirm for us that the oil is really there, in which case, at that point, we might want to then participate. Or if they don't continue, because of relinquishment, the field is going to come back to us anyway, as a country. So given those dynamics, it doesn't make sense to invest in Yankom at all, unless we are getting it for dead cheap. That's our first position. Regards to Pecan, we concede that with Pecan, there's been some drilling that has been quite interesting. But the funny thing in respect of Pecan is that the amount of money that we think it's worth itself is so problematic that the $1.1 billion ceiling we have from Parliament to spend is very likely that we will spend too much of it. And the position of civil society is that we should spend very little of it. We think we should spend about $400 million or much less. And the reason is pretty simple. It's pretty simple. It's simple arithmetic. First, the Minister of Energy himself has convinced us that when it comes to Ghana, as far as recovery rate is concerned, we should use about 25%. So after you've established what you think is very probable in that field, what we often call the 2P, you have to discount it further by the recovery rate that the minister himself has been promoting since 2019 when he started engaging in this debate. If you do that, the amount of oil you are likely to get will come down significantly. It may come down to as low as 70 million barrels in terms for you to use for your analysis, in terms of what is the most rigorous volume estimates that are possible. But let's even be generous and say 100 and something million barrels and the rest of it. Then you need a break-even cost of production point. And that break-even point, we think $35 is still the reasonable amount because all the concepts that AKER has been promoting around has not gone through a proper scrutiny of a POD analysis. If you use $35 as the cost of getting the oil out of the ground, now you've got a certain profit. You're going to get that money over a period of time, let's say 15 years, 20 years. You discount it using the 10% that they want to use for Pecan, which we're not quarreling too much with. You get around the numbers that we are talking about. You don't get the numbers that they are talking about. The attempt to value that, in the range of 1.3 billion, getting to 1.5 billion and the rest, and value the two fields at $2 billion, is based on assumptions that are highly aggressive and contradict everything we know about the fields. Remember, before HERS, which has held the Pecan block from 2006 until 2018, before HERS, or at least held the majority, before HERS left, they had drilled 7 wells. They had discovered almost everything we knew about the field by 2013. It was only because of its loss that they didn't go ahead and go into a more aggressive plan of development. Then after it lost, the environment changed, the market environment changed. So it went into a low price environment at some point, and the rest of it, they decided to leave because there were better prospects elsewhere, like in Guyana and the rest. But they knew that despite the fact that it already established about 330 million barrels of oil equivalent there, of which about 250 million of which was probable or proven, they knew that nonetheless, there was a lot of de-risking yet. So when they were selling out to AKER, they sold it for $100 million. We're arguing that when AKER then came and drilled 2 additional wells, Pecan South, Pecan Southeast, the results that they got suggested that maybe they could add maybe 5 to 15 million barrels of oil equivalent to it, etc., etc. It wasn't that interesting, which is why they then went around trying to raise money, etc., etc., finding it very difficult to raise money. They cut the cost that they need to develop. They said they will only start with some of the first, etc. They still could not raise the money. They came back. They are there for $100 million. Our key argument is that they have not de-risked it enough by doing additional investment to prove that they have added too much sufficient value for us to now start to value those fields at above $1 billion. So in that regard, giving them anything up to $200 million is plenty. Then they talk about the issue of costs. Oh, okay, but they've spent some money and the rest of it. Well, first of all, that is not how they've been valuing the fields. They've been valuing the fields in terms of what oil we are likely to get from it, the earnings in terms of oil, and the present value of that amount if you take away costs and use a reasonable discount rate. So their costs are not really that relevant to the valuation. But the truth of the matter is that they exaggerate the costs too. They talk about, $800 million spent by one party and the rest of it. And when you go to the annual reports of the companies themselves, and you look at what they filed in stringent jurisdictions, you can't find that amount. You find, for instance, Hess saying that they spent about $268 million in the field. You find AKER, and particularly the parent company, TRG, suggesting that, they spent a couple of $100 million. When you add all of that together, you don't get into in the region of $800-something million, much less the $1.2 billion that GNPC claims it will have spent. Why is that important? It's important because while it's irrelevant to the valuation debate, what GNP is actually suggesting is that when the time comes for taxation, which is how we get our revenue, most of our revenue from these fields, all of these costs are going to have to be offset. And we are saying that that is actually a very dangerous thing for them to be saying, because we know they've not spent that amount in those fields, because due to publicly available information.
Okay,
when you analyze all the information I've given you, it's quite obvious that we are getting a very raw deal as a country, which is why we are suggesting that they should pay very little for PICAM, and they should not touch Nyankom until private sector has de-risked it sufficiently.
So 1.6 billion is too much as far as you are concerned. But from I say
1.65 billion is what GNPC wants.
Yes, 1.65 billion.
Only $1.3 billion was what we were going to use to buy the fields.
Right.
Parliament said they should spend only $1.1 billion.
Right.
So they have a ceiling. They have been given a blank check of $1.1 billion to negotiate a stake. We are saying that they should spend far less than that $1.1 billion. That is really the sum of our argument.
I clearly don't have a deeper grasp of this subject as much as you do, but GNPC and those involved tell us that these are the benefits that will come to this country. More importantly, in May, or was it in March 2021, ExxonMobil suddenly leaves this country after the 3 years of work in the deep tunnel area. And if this country had developed the local capacity, we would have been able to take over and deal with this situation to our own benefit. So they say the present transaction that they are looking at will give us taxes and royalties approximately 7.5151 billion US dollars in nominal terms. It will give us substantial foreign exchange inflows estimated around 27 billion in nominal terms, US dollars. If I read this, I have a difficulty. The basis to challenge what they say and why I should not be interested that the country is going to reap all of these benefits.
Okay, so it's very simple. You just use their own analysis in 2019 when they went to Parliament twice, June and December, to tell the parliamentarians that, this PICAN and this Nyankom AGM block, I'm calling Nyankom block, they are not that, they are not that rich and all of that. So for that reason, the investor is struggling to raise money because we have too much of it. We having too much of it is a bad idea because they can't raise money if you keep having too much of it. So Parliament, please reduce the amount of stake Ghana has in these fields. And on top of that, reduce the amount of say we have in how they are developed. They said that there were too many approvals that you need from Petroleum Commission. If you want to do this, you have to go to Petroleum Commission. You have to do this, you have to go to Petroleum Commission. Parliament, take all that out so that AKER will have a free hand and then they'll raise money and develop the block. Because the block crown is not that whatever. This was a time when the minister was aggressively making the case that the recovery rate in our fields is 25%. Provable oil reserves in the field is not that huge as we were claiming, etc., etc. That was just 2019 December. Now, in a year and a half, GNPC has suddenly changed its mind, suddenly had an epiphany, and believed that billions of dollars are going to come to Ghana. From where? I've given you the numbers in terms of what are the 2P resources that are most concretely assured. I've given you the likely break-even costs of producing that oil. Well, I've not even brought in the fiscal regime in terms of the taxes they have to pay and the rest of it in order to declare profitability. We have fields that are much cheaper to produce in Ghana, like Jubilee and the rest, compared to this very ultra-deep water environment. Go and read some of the reports that Halliburton made when they were doing wireline logging on that field. Some of the experimental things they had to do in order to meet the requirements that AKER had set. Given all that complexity, it's it's unlikely that this is more profitable than Jubilee. And we know that operators on Jubilee have struggled when oil prices have gone into a low price environment. So the likelihood that we'll get all that oil makes no sense. Jubilee, when we first started, they said they had 3 billion barrels of contingent resources. Today, we produce about 320 million to 350 million barrels from Jubilee. They are telling us that it's now left to about 550 million barrels and the rest. All that talk of 3 billion barrels, 1.8 billion barrels, they are all no longer being heard. So it's very clear that the minister up to a point is right when he says that recovery rate is low. So when we look at those resources that we have estimated, we have to discount them by how much you can actually get out of the ground. So the volumes are under pressure. After we've done all of that, let me land on this point. Yeah. After we've done all of that, we have to look at the cost of production, the profit, and then we have to discount it by looking at the time value of money. When we do those numbers, we don't get the billions of dollars they are talking about. They should publish their model and let's all query it. On top of that, we have fields in this country which are discoveries, like Jata, where they've actually given it back to Ghana. That, we don't want it anymore. You take it. And there's oil there. Good quantities of oil. Wawa, they have discovered oil since 2012. That's Cosmo. They decided not to produce. There are a whole bunch of these opportunities. And we argue that in most cases, those opportunities are superior to this. They make the argument that they cannot be developed as a standalone. In some cases, they are closer to production platforms than now. And if you have a platform sharing model in the country, you can use it. And then last but not the least, if they talk about the fact that they need apprenticeship, we argue that they've set up joint ventures specifically for that, like the GNPC Technic company that is set up in 2012, the move that they are making with Halliburton and the rest. All of those makes it possible to spend far less than $1 billion to get that apprenticeship. Okay. Nobody pays $1 billion for apprenticeship.
Yeah, so
the value of the transaction is dubious.
All right. So my perhaps final question to you for some 30 minutes input before I go to my other guests on the table is, your case is that unlike what they are telling us, that since taking over the asset, AKER and the AGM have not added a total of 267 million barrels of crude oil to our oil resources in the blocks you are talking about. And
we had a 3-well campaign.
Yes.
And 2 of them were very interesting. 1 of them not that interesting. Of the 2 that were interesting, Southeast and Pecan South, we know the numbers because they have to publicize those numbers for their stakeholders. And nowhere can you justify that those 2 wells have added anything beyond a few millions of barrels to the reserves picture. It's not consistent with what the operator themselves have been saying in different fora. So this notion that somehow they've increased the commercial value of the field dramatically since Hess, it's not true. It's not borne out by the data. On top of that, we know that there's significant risk remaining, which is why even the most optimistic forecast in terms of when you start producing around 2024, thereabouts and the rest, we say they should learn from how AKER itself got into the field. When already there are 7 fields that consecutively had success. That was Hess. Hess still decided to leave, and when they were leaving, they were fine to pay to give it to AKER for $100 million. That should guide them in terms of what the true value of that field is.
Interesting. I don't know who comes in. What do you see? The GNPC and its consultants, advisors, see something that it appears that the civil society within the industry don't see. And they say, look, we are going to deliver Ghana an ambition to own our oil resources. And we see all these figures. How come there is this disconnect between what they see and what the civil society in the area also see and insist?
I would make 5 points.
Okay.
The first one is the presumptions underlying the deal, which civil societies call one either faulty, incoherent, or inconsistent. And the problem is that if you have a deal which you are so convinced would bring this, windfall in terms of revenue down the stream, and that's for which reason we need to contract a loan, not even take existing resources, but get a loan to do this. You need to be able to stress test it. Put it out in the public domain, all the underlying assumptions, for people to be able to engage with that data, and let's have a conversation about it, looking at historical information and looking at how market projections will go over a period of time. That part has not been done. And so if you continue to hoard information which you claim to be underlying why you want to do this, and not putting this out in the public domain for real engagement to happen, then obviously people are still going to doubt your motives as to why you're insisting on this, when based on information that everybody else has, we are seeing a different picture. So that's my first call to them. Let's put that information out there. Because so far, the presumptions that we are all getting seem largely incoherent and inconsistent. The second one, obviously tied to this, is definitely questions of process and evaluation that is going on. So I take something from the parliamentary approval that the Joint Committee gave, where it says that don't spend above 1.1 billion. Now, an institution which is decontextualized, doesn't have enough figures, sets a ceiling. On what basis is it doing that? So that's my first question for me is, well,
they have committees.
You have a committee
with members
which is not technically competent.
Who have expertise.
You have a committee which is not technically competent, which is not assisted by experts in any regard, which, as far as I understand, did not receive memorandums in making the determinations that they have done. So on what basis do they set a target and say this is where you shouldn't breach? There has to be a basis for why you make public decisions. And I haven't seen that. The third one is capacity questions. We know that GNPC, well, about $1 billion has been given to it in the past, and its attempts to be an independent operator.
Right.
We haven't seen anything materialize out of that. So capacity questions remain as to your own track record and what you can do based on what you're promising. They can't say, so you haven't delivered in the past. So for which reason which would garner any particular confidence in you being able to perform in the market? And that's one of the things that it's a real concern. Bright talked about certain examples of certain fields which have been abandoned, and whether we can test your feet in the waters by showing us what can be done around those, and which we can do it for a significantly low cost, which we haven't been able to do. So I think that's one of the ways in which we need to be able to get into the conversation. The fourth point is around the investor questions. So there's something Bright said about, wait a couple of years, they're going to leave these fields anyway, and all these valuations will not even matter. And this would be due to a failure, and mechanisms exist within the petroleum agreements where we can get a lot of the fields back if they are not investing a requisite amount over a period of time. So why are we jumping the gun again in that respect? This, for me, comes back to the presumptions underlying it. One of the things I've read is that, well, we know that the market environment around climate change and transition is going to make investments around this area much more difficult. But this also presumes that the costing and what you're going to get in the market for the cost of the barrels produced are also going to reduce over a period of time. So we are going into an area where you already understand that the reason why investors will be withdrawing funding is not necessarily the moral question, but it's also because the limited amount of money that is going to be getting over a period of time. So why are you going where everybody else is withdrawing from? Then finally, listen, public sector workers or persons in general, there's a significant amount of people who are technically competent. There are people who are decidedly incompetent. But what I know and understand is that a lot of actors in our space are not incompetent for no reason. They're motivatedly incompetent. So we have to follow the money. Because I do not see an aggressive attempt to pay some Norwegians or some other people a $1.3 billion without a local incentive in those processes. I haven't seen politicians being willing to give that money away without having certain kickbacks assured for them. The same conversations happen around Vincent Bolloré and the port systems, where there are apparently certain individuals who are getting paid on the side. And so those interests must be investigated. I don't know whether it takes the form of a corruption risk analysis that was done for Ejapa, but this is clearly the new Ejapa that we are dealing with. And I don't know how we get into who is looking to benefit and the profit incentive or the corruption incentive that exist around going into a space where there are clear roadblocks and there are clear signs that there's too much risk for even this to make sense to anybody to whom the thing is painstakingly explained as Bright has done to even a 7-year-old. So those are my sort of comments on this.
We've got some 13 minutes to close the program. Today we did just 25 minutes extra time. We'll take a break and return to have Dr. Eric Odrosai also bring his perspective, but more importantly, he has already raised issues about GNPC's conduct, which it says is positioning itself above parliamentary approval for international transactions, which it cannot do. This is Newsfile is brought to you by Bank of Africa, as strong as a group and close as a partner. MTN, everywhere you go. Ashesi University, educating ethical and entrepreneurial leaders for Africa. Robert & Son, seeing is believing. Waylead, home is where you start from. Star Assurance, your solid partner. Duraplast, where Duraplast goes, water flows. DBS Industries and MG Auto Trading, official distributors of MG vehicles in Ghana. We'll be right back. You're welcome back. This is Newsfile, it's your most authoritative news analysis platform, and here on Newsfile we put Ghana first. And we have just about some few minutes to go. My guests have been Bright Simmons, Honorary Vice President, Imani Africa, Oliver Barker-Vomawo. He is researcher, University of Cambridge, Faculty of Law. Dr. Eric Odrosai is Director General, Internal Audit Agency. Yes, so let's get your perspective on these developments. From a commonsensical approach and from the information I have received from those behind this thing, it looked so good. It sounded so nice that we're going to spend in total, as had been earmarked, 1.65, billion dollars, and then in return, in taxes only, we're going to get 7+ billion. We're going to get another 27 something billion. That was so good. I felt, Charlie, Ghana is going to take, like they say in Chi, take it better cloth.
Thank you very much, Samson. I see, when it comes to things like these, you interrogate the fundamentals.
Right.
I really do not know the data to which Simmons is speaking to, and then also GNPC has its own data. And I want to believe that there is a need for data synchronization because GNPC is a state institution. They may have some data or information that Bright may not have. Bright may not have something that they may not also have. So I think it's about transparency. It's about carrying Ghanaians along. It's about listening to the other view as well. You may have internal capacity, but he's raised a number of issues, and his understanding is that, look, this is not good for us. And he's even attacked the capacity of the committee that looked at the deal. And that, as my brother here was saying, that he did not think that they benefited from an expert advice. Put all together, I would call on GNPC to at least open up the system, listen to the other side of the divide, listen to Bright Simmons, and where there is the need for data synchronization, they synchronize the data. But they have one responsibility to Ghanaians, that they should manage this for value for money. They should manage this in a sustainable development manner so that in as much as those of us alive today meet our developmental needs, we lay the foundation for the future generation to meet their developmental needs. And that is ensuring that this particular transaction gives us value for money.
Right. So you go to your next issue about their contractual international...
Yes.
I needed to say that you said they need to open up with these CSOs and the rest of them. They have done an interaction with them, and they have justified every point that they have made to project what they are doing, except that the CSOs supply what in their estimation is superior data and information, including internal incoherence by issues that come out from a partner to all of these things, to suggest that what they are talking about is clearly, it's cutthroat. It's undeserved.
Yes.
They are not deserving.
Samson, you see, we are all Ghanaians, and we have a duty to protect the interests of Ghanaians. If CSOs believe strongly that they have data that can support the work of GNPC, and that GNPC has a data that will not inure to the interest and benefit of Ghanaians, they have every right to go to court to compel GNPC to use the required data in the interest of Ghana. It's very important.
I don't know what sort of suit that will be. I can't contemplate it now, but let's move on to...
So the next one is the issue the Auditor General raised under paragraph 82 of the audit report. Now, he indicated that they didn't secure parliamentary approval as far as about $34 million worth of contracts is concerned to 5 foreign suppliers or contractors. And he indicated that they use single source method for 4 of the transactions, and in 1 instance, they use restricted tendering method. I want to agree with the Auditor General. See, when you look at the Constitution, clearly Article 1815 is clear. And when you look at the GNPC Act, they are a state institution. They are an agent of government. The business they are undertaking are for Ghanaians, and they are expected to comply with the public financial management laws of Ghana. So to that extent, I believe that this international business transactions directly falls under Article 1815, and they ought to have gone to Parliament for an approval. And here, I would want to agree with the Auditor General. The GNPC would just have to do the needful. But the Auditor General also made a recommendation here that they should be sanctioned, the management of GNPC should be sanctioned in accordance with Section 92 of the Public Procurement Act. And Samson, Section 92 of the Public Procurement Act is clear that if you breach or you contravene this act, you commit an offense, and the penalty is 2,500 penalty units or a term of imprisonment not exceeding 5 years or to both. So I'm just advising the GNPC management and the dealer chief to just comply with the law and get either parliamentary approval or the sanctions under Section 92 be invoked in this regard.
Interesting. Right. In 1 minute, what will be your final comment? How do we, because we are not getting any signal that GNPC intends to do, or the state intends to act differently from its initial position.
Okay, I think, but very quickly on this issue of the international business transactions and their approval, I think this is the time for the Attorney General or someone like that to issue an opinion, because when you read those Supreme Court judgments, and as I said, from AKER Energy, moving on through Faro Atlantic, then Clomega, and then finally Amakasibe Yeboah versus the Attorney General, it seems as if public corporations should not get international business transactions unless they can be proved to be an outtake of the government. So I think that matter is a very interesting one, and we need to get some authoritative view on that.
The good news is that we understand the Attorney General Cabinet is almost done with a bill to go to Parliament to do what the Constitution commands, that the modalities for these should be provided. So let's hope that is done and done as quickly as possible. I have some 30 seconds to go.
Yes, I think in respect of the GNPC matter, we really believe that where we have discoveries all over the place that are struggling to get investment, some of them have been relinquished, some of them are closer to production platforms and the right for tie-ins and the likes. They have to justify a portfolio decision to say why along all of these ones we think Nyankon is useful.
All right.
Then for Pecan, as we've said several times, they need to really do the value for money audit with an independent transaction advisor that is not looking at potential possibilities of raising funds for the government for fees, but it's focused purely on the value for money audit.
All right.
So not this Bank of America securities thing.
Thank you very much, Bright Simmons. And thank you, Oliver Bakavomawo, Dr. Eric Kodrosai, and Beauty MFA Nate, Executive Secretary, Ghana Anti-Corruption Coalition. And I want to direct you to Habel's Couture. Habel's Couture. That's where you get the best of African wear. You get kaftans if you're looking for them. You call them on 0200 84 1988. They are at Ajiringano Gate, East Legon. And today I'm not wearing one of that, but you'll see. I'm wearing Said Ali Yaqub 1 year anniversary. He represented commitment to critical journalism, independence of mind and thought, and integrity. And that's why the newsroom at Love FM has been named after him. Have a good afternoon. I'm Samson Ladi Anyanini.
Hello, my name is Nathaniel Atto. You can catch up with all the fun and inspiration on the Joy Sports link here on Joy 99.7 FM, together with all other shows over and over again. It's very simple. All you need to do is go to myjoyonline.com/podcast and relive all of those fun moments over and over again. Joy 99.7 FM, your radio for discerning listeners.
Joy 99.7.